What's up, YouTube? It's Joe Cachapolia sitting on the couch, making some money investing in fractional real estate online. As usual, it's been a good couple of days for actually making money on some of these platforms. I was able to exit some more of that duplex I mentioned on Lofty in a video or two ago, where there's just been a big boost since I bought the tokens, and I'm selling at a between 20 and 30% ROI, and on tokens I've held for at most 2 months. So those really interesting opportunities over there. Got my first payout from Mogul, well, my first full month's payout from Mogul for their Axelrod property. This went online for a couple of days in November and paid a small amount, but the December payment, which we just got yesterday, I believe, maybe even today. Well, yesterday because it's after midnight. Um, it's the first for the full month, and it was for the month of December. It was this was a short-term rental duplex in Houston. It's one I was pretty excited about when I saw it. If they can keep up their performance, and I'm going to do a little bit of math, and I'm going to show you what I think, what I think the outlook is for this property, or just a rough idea. Um, if they can keep this up, I'm going to be really excited about this platform. I did create a playlist for all the videos and properties that I've done for this, so I've covered a couple other properties. To be perfectly frank, this is the only one I'm really excited about on there. I do own a little bit of another one, most of which just came from bonus shares that they gave out. So that's one of the things, that they do. They seem to do pretty regularly. And I think it's because it's a newer platform and they're trying to get people on. But, they give you a $50 bonus credit when you first get on. And I think you have to spend $250. I'm not exactly sure. I do have a link in the description below for that. If you want to check that out, I did it on my first one. But then in addition to that, if you buy larger amounts, like I bought $5,000 of this one, they gave me $250 in extra money that was just immediately credited to one of the other properties on the platform. You can see that in the original video that I did about this. And again, I'll put the link to the playlist below. That'll show you this one and a couple other properties on their platform. But very quickly becoming one of my favorite fractional real estate investment platforms. Of course, it's very early still. The two things that I like about them when compared to some of the other sites, well, three actually. One, I think that they have some real estate experience in their founding team. Now, it's not decades of experience, but they're two people that have 1 to 3 years, but at an institutional level, picking out properties all day, every day, of this type of property. So they really understand residential real estate investing and finding deals, and that's been my experience. So I mean, at least that's the claim, and that's been my experience so far. I think when I look at their properties, they only have, I think, 9 on the platform right now, and I think only 3 are available to invest in. This is the only, like I said, this is the only one I'm really excited about. I do have a little bit of money in another one. Um, but on average, I think they're picking just much better properties than what you see on a lot of the other platforms. Um, you know, eh, on Lofty, for example, they have 150 properties, and there's probably 5 that I would own, maybe 10, 5 to 10 that I would own at their original offer price, which, there's a whole bunch that I like at their current prices because the prices have gone significantly down from when they first went on the platform. But there are very few that when they come on there, I'm really excited about. There are some, but I think on average, these ones, I don't think you have to dig as much, right? I think that I really analyzed 3 or 4 properties, and I picked one so far that I really like. Uh, Hopefully they have some more. Hopefully this one wasn't a fluke. But and again, just because I like a property doesn't mean it's one that you should buy. I think this one might actually be sold out now. I'm not positive, but it is. You have to do your own due diligence. And the ones that I don't like as much, or that I opted not to buy, the same thing. I mean, maybe they work for you and they don't work for me. I mean, we don't. This is all just my opinion, um, based on the information that I've gotten from from their site and from the due diligence that I showed. So real quick, let's just jump into the math of this, okay? Um, did an initial investment of in this deal $5,000, and $399 is what they charge, in like a processing fee or the ACH fee or something. So the fee there, their fees are actually baked into their price. Basically, you're not paying a fee on top of the investment. There, so it makes it easy to keep track of your basis in all of these things, which is one of the things I don't like about some of the other sites is that they don't do that, and then it's you just have to track that separately. But so that got me 5,050 shares, and that's because I got the $50 bonus credit because this was the first one that I bought on there. Um, they have, this doesn't include, as part of this purchase, I actually got the additional 250 shares in their, in the Roads is the other property they have on there. So, but anyway, I'm ignoring that, although that was, basically some free money that they added on top. But so for the month of December, I got a dividend payment of $53. It's not a huge amount of money, but when you compare it to what I invested, it's about, a 1% cash on cash return for the month, and that is your actual cash on cash return. And so if we annualize it, that gets you to 12.59%. Well, let's look at what they had projected. They thought their year one cash on cash return would be 11.6. So I think we're right in line with that. And then so the first question is, well, okay, we got 1 month right. How likely is that to continue? And based on the due diligence I initially did, I felt pretty good about it. But one of the things I did today is I pulled the property up on AirDNA again, and I looked at, what they're, one of the things that AirDNA does a good job of is showing you the seasonality of markets, right? Like every single market you can see, you can go in and look at what their revenue expectations are, and even if they're not right on the specific number that you're going to hit, they're pretty good at getting the trends, right? Like I believe that June and July are some of the better months. March is a surprise to me. I'm not sure. Maybe there's a spring break draw here or something. I really don't know where that's coming from. But you can see December is projected to be one of the worst possible months in this property. And so if they can hit that number in the first month, I think that's pretty good. Now, one of the things, because it did just go live, you'd expect that there's probably not a whole bunch of repairs and maintenance to drag down your NOI for that month. So, maybe it's easy to hit the first month or easier, but considering that December is supposed to be a rough month, to hit that dividend in that first, that cash on cash in that first month of operation, I thought that was pretty good. Uh, and so, let's say 12.59, or what did I say? They said, if they are actually able to hit their cash on cash yields that they project, right? If they, and this is, I'm using their base case. They do a bull and a bear case as well. It's a pretty tight range. I think I talked about this when I looked at that. I'd love to have their bear case, um, actually really look like a bear case, right? But because I think things could go a lot worse. But in any case, you know, let's say that 11.6%. You might, a lot of people, especially if you've looked at a lot of the lofty deals that I've talked about, that might seem like a low yield, but there's a couple things you have to think about because this is a true levered cash on cash return. This is a property that has debt on it that is being paid within the entity, right? So it's not that weird structure where the debt's outside of the entity. And that, and what I'm comparing this is, some of those real high yielders that you see on Lofty, but those ones you have, what I've mentioned lots of times, there's reasons that could possibly break. But here it's a much more traditional structure. You have the debt within the entity, that cash flow is being paid, or that debt is being paid down. I think actually, and so you have the standard, in real estate in general, you invest for four things. You want your cash flow, you want your equity pay down, you want your appreciation, and you want your tax advantages. Now, I actually think this one, the debt might be, let's see, let's move this. the debt might this might be a interest. Yeah, this is interest only, right? So we're not getting equity pay down, but it still doesn't make it like the lofty ones, because even though you're not getting an equity pay down, you're also not getting diluted by somebody else paying it down. And if you don't know what I'm talking about, I go into this a little bit in the video I did last week or a couple days ago. That's 7 things everybody should know before investing in lofty. Their strange debt structure is one of them. I'm comparing these sites. I'm not telling you I think Mogul is better. I'm investing on both. I think Mogul is much easier for me to understand as an experienced real estate investor who has been a part of these deals a lot in the past, and I think it's a much more straightforward structure, right? I mean, you're getting all the benefits of real estate, even though on this one it's interest only, so you're not paying down the equity, but you're not getting like this reverse effect of somebody else paying down the equity and that diluting you. So I like that. Obviously you can continue to get appreciation, and then it's my understanding that you're just getting a K1 on this, just like you would if you invest in somebody else's real estate deal in real life. Provided that's the case, then that means if there's a tax loss due to depreciation, which I'd expect that there would be. Then however that hits your taxes, that is should be helpful. And for I know for a lot of my clients in real life, their main one of their main motivations for getting into real estate is the tax advantages. And so by getting by investing in deals that are really the more traditional real estate deal, it allows you to to get all of those benefits that you might be used to when looking at deals, in other places. So I don't know if they can keep one. I mean, it's still early, right? I mean, this is 1 month of performance from them. Any number of things could go wrong over the next several months or several years. But so far, it's a good result. You could tell when I did the video on this property, it was a property I was pretty excited about. I think it's a good pick. I know it's a strategy that's working well in San Antonio, doing really nice short-term rentals like this. It's something that a lot of my team's clients have done here. And so I think it is, I really liked this deal. And it's so far it's working. If they're able to consistently find deals like this one, they had negotiated a decent discount from the asking price. Um, on an operating asset, it just I think um, it's a good sign for now, right? And I know there are plenty of the other platforms that are not doing so well today. There might have been a lot to be excited about them in their early days too. Although I can tell you, a lot of the early properties on many of the other sites, even though I wasn't there, 3 or 4 years ago when some of them started, I can look at them today and, as somebody with real estate experience, know that those were never good deals. A lot of the Chicago multifamily that we have on Lofty, that's stuff that nobody was ever going to make a lot of money on. Um, a lot of the Cleveland and they were just not they weren't you could tell that they were deals that were picked by novices for the most part. Where these, the ones that are on here, even though some of them I think they missed some stuff. There are some of the things that came up in my due diligence made me decide against them. I think on average, the quality of the deal, the markets that they're picking make a lot more sense. So for me, you can tell I'm pretty excited about them. Uh, Whether or not that it turns out to be as good as it feels like it might be right now is anybody's bet. So don't just because I'm having some emotions, don't use that as your due diligence, right? Dig into it yourself. I also have had fantastic experience with their with their customer support. They, for some strange reason, they paid out that dividend in 2 pieces. They did that. I don't know if it was accidentally or if it came from 2 different accounts. But so the email that I got that said what my dividend was didn't match up with what the amount I got in my account, because I got more. And I contacted them and got an instant answer, which has not been my experience on a lot of the other sites. I've also, been on phone calls with, real people at Mogul more than once. And then they also do like webinars that you can call in talk to them, and they are really transparent. So, I've appreciated all of that so far. Um, whether or not, like I said, whether or not that continues, I mean, it's anybody's guess. But so far so good, and so I just wanted to share that. Um, and like I mentioned, I maybe remember this time to say at the beginning, but I don't know. So please like and subscribe if you haven't already. I do have a link to the uh, to that $50 credit if you want to use that. Um, Again, read the terms and conditions because I used it when I joined. You have to invest a certain amount, but it worked pretty easy for me. It wasn't like some of the sites where you put it in and then you just wait a really long time for it to hit. Like it was, I got to use it as a credit in my first purchase. Um, yeah, so link to that and then a link to the playlist. So you can see the other ones that I've done for this. If you didn't see, if you're interested. And like I said, I mean, check. This one might not be available still. But they do have others. And I think it's one to just keep track of, a platform because if they can continue to operate this one well and continue to pick properties that I think will do really well. And, like I said, I think that I am overly critical and maybe choose not to invest in certain properties that uh, I'm just more risk averse, I think, than your typical real estate investor. And so, if you see me say, hey, I don't think the Krakow or the roads, I'm not going to put a bunch of money in either of those. Um, I don't necessarily, just I still want you to decide for yourself, right? I mean, and that's the end of the day. Please don't ever take what I'm doing as what you should be doing. I'm really just trying to share my knowledge and experience, and then you can use that to make your own judgment. I think that is all I have to say. There's, a very long video to say that I got $53 today. But, overall, I just think it's a good sign. Kind of kicking myself for not putting a lot more money in this one. Um, but it is still early, and 2 months from now, who knows, right? It could go the other way. In any case, until next time, I'm going to keep making mistakes so that you don't have to.